Hello and welcome to the Weekly Outlook at XM.com. Next week, the spotlight will turn to the British pound, while we'll also get growth indicators for China and Japan and retail sales numbers in the US. I'm Maria Pachardez, and joining me is lead investment analyst Rafi Boyadjian. So Rafi, let's begin over in the UK, where all eyes will be on the much-anticipated autumn budget statement. Chancellor Hunt and Prime Minister Rishi Sunak will certainly be eager to regain some economic credibility. What are we likely to hear from them on Thursday, and how might their decision impact the pound?
Well, Maria, like you said, I think the priority for the new Prime Minister and his Finance Minister is to regain some economic credibility following, of course, that mess that came with the mini budget, where markets started to seriously question the soundness of UK economic policy. So investors will want to see that the forecast that the budget statement is going to include, whether they're going to be aligned with the forecasts coming from the Office for Budget Responsibility. So this is what the previous Chancellor failed to do, and that's what kind of made markets question whether the government's forecasts can be trusted or not. But there is a risk that the new Finance Minister, Jeremy Hunt, may go too far in terms of tightening fiscal policy. He may go too far in terms of raising taxes and cutting spending. Now, this, of course, would be positive in terms of bringing inflation down, but it would also mean that Bank of England would not have to raise interest rates. So that could potentially influence which way the pound goes. But I think in the short term, at least, we probably will be getting a lot more rate hikes from the Bank of England. And that's why investors will also be focusing on next week's data out of the UK. We've got job numbers coming up on Tuesday and the latest inflation numbers for October on Wednesday. We could see inflation in the UK ticking up to 10.8%. And that would mean that, at least for now, for the time being, we should expect more rate hikes. But of course, if the autumn statement is quite aggressive in terms of tightening fiscal policy, we could see a much shallower rate path from the Bank of England, and that might overall potentially be negative for sterling.
Okay, moving over to the US now. The dollar had its worst day in over a decade after the surprising drop in CPI inflation. On Wednesday, we'll get the latest retail sales numbers. What is the forecast for this upcoming data, and what's the outlook for the dollar?
So the dollar clearly took quite a tumble on the back of the weaker than expected CPI data that we got out of the US for October. Nevertheless, a 50 basis point rate hike is still fully priced in, and there's still a decent probability of a 75 basis point rate hike. But investors do see the Fed funds rate now peaking below 5%, and the odds of a rate cut in late 2023 have gone up following the inflation data. So even though we may have seen the end of the dollar's bull run, there might be some support for the dollar next week from the retail sales numbers, because we are expecting a bit of a bounce back in October after a sluggish few months. So that might potentially halt the dollar slide, at least in the short term.
Turning to Japan, we'll get GDP estimates for the third quarter on Tuesday and CPI stats on Friday. What are we expecting to see there, and what will it mean for the yen?
Well, we should see a solid quarterly print of 0.3% for Japanese economy, and that shouldn't be too surprising, given that there's still plenty of stimulus in Japan, both from the Bank of Japan in terms of their yield curve control and negative interest rates, and of course the very weak Japanese yen. But inflation has started to pick up, and we could see actually the core CPI measure that the Bank of Japan targets for its inflation goal. That could potentially hit 3.5% in October. That data is out next Friday. So although the Bank of Japan would additionally, they do want to see higher inflation, they would actually welcome strong inflation numbers. They also want to see additionally higher wage growth. The question is whether how much are going to they're going to wait for wages to accelerate substantially because, of course, their current policy stance has caused frictions in the markets. And should we see the core CPI continue to head higher, we could get more and more hints from the BOJ that the time to exit their stimulus policies is nearing. And that would quite certainly help the yen, especially now against the softer US dollar.
Is there anything else we should be looking out for next week?
Well, it is going to be a fairly busy week overall for data. Some of the other highlights are the industrial production and retail sales numbers coming out of China. We are also going to get employment data from Australia as well as from Canada. Now, the Australian dollar in particular could be quite responsive to both the Chinese and domestic data because there is growing speculation that the RBA might keep rates on hold at its next meeting in December. So any positive surprises there would dampen potentially those bets. In Canada, also investors are unsure whether the Bank of Canada will slow down its rate increases to 25 basis point increments in December, or they're going to do that later on next year. So the CPI data will be quite important too.
Rafi, thanks so much. And thanks for joining us at XM.com for this weekly outlook.